Hi friends, welcome to Moonlight Trading. This is post-market analysis for 28th Feb 2023. So today we will actually go a bit deeper. We will not just look into Nifty or Bank Nifty, but we will also look into international markets and take a much broader view on how we are positioned and how the global markets are positioned. So what has happened in the last 2 years? Increased just like our Indian market, and then it has corrected due to inflation fears. But from October, unlike Indian market, US market didn't actually hit any new high. In fact, the super trend 10 to 10.3 acted as a good resistance. So the price has come to 41.80, moved back below 4,000. Currently, as we speak, this market is around, I would say, somewhere around 4,000. So as per this setup, because the price is trapped between both the super trends and also the averages, this is a sideways market. If we go a bit deeper, again in the daily also you see the price is trapped between 2 and 3. So if you go a bit deeper, again here on an hourly, this is trapped between 2 and 3. It's a sideways market. So frankly speaking, in US, across the three main time frames, the market is sideways, and there are no big trending moves that are happening in US. Well, after saying this, most of the traders think that India will also be sideways because US is sideways, or the entire all the global markets are will be sideways. But frankly speaking, what's happening nowadays is if one market is sideways, the other is trending. If other is trending, this is being sideways. That's what I see happening. Let me show you before we get into Nifty and Bank Nifty. Let me show you what are the various indices. So I've gone to investing.com indices markets. So here, if you just scroll down, here you have a list of all the US indices and European indices. So Singapore, this is all Asian indices. So broadly, you see a mix of blue and green and mix of green and red, which is mixed signal, right? So not much trending moves across the market except India. We'll come to India a bit later. So coming to now, if I'm coming to commodities, I think there is some bit of bullishness in gold, but rest are all even in the WTI oil has crashed, but it is so bonds you can ignore, stocks also you can ignore. So all in all, you have seen S&P 500. Now let us see what exactly happened today in Indian market. I'm showing you a new screen from Stock Edge where I see every day at 8 p.m. So I see FI cash today. FI have sold 4,500 crores. In fact, this is the, I would say, the biggest sell figure in last 1 month. So FIs are actually selling in a big way, and DIs have countered it with 4,600 odd crores of buying. So if you go a bit deeper into derivatives, this is cash market. Into derivatives, what you see here is client, this is retail, is long 96,000 contracts. DIA, which is institutional, they are long 32,000. Both together are 1,28,000 or so are long. FIAs have actually increased their short position from 116 minus 116 to minus 131. So one thing is clear in this market that FIs are short and selling in cash markets, and that's driving the index lower. They are doing it without impacting the rupee. Rupee is not going above 83. They are doing it even though the world markets are sideways. Why would they do it? Why would they actually sell the market in a big way when the indices across the globe are sideways? And why are they selling in cash market? Because they would get the average selling price at the price at which they would like to sell. So there is no rush in the street. It's clear that DIs will support the market. Retail in that post budget, I would say, bullish mode. So they will continue to be buying in SIPs and buying the India story. And these folks are selling their stocks when they can make hay. Because who knows, if the world markets turn bearish, maybe India would be the worst performer. So they are actually selling it because thinking that if everyone is trying to sell, they would not get a good price. So if there are people who want to buy, they want to sell so that they get a good price. In fact, this is as I told you in the last this particular this is the Nifty index. So here I have applied few trend lines are drawn and few horizontal lines are drawn. And first thing I observe here is the trend is down. Every day the stocks are falling, and I have this is the ninth day of the fall. Can you imagine? I have never seen continuous movement of 9 days in one direction. I'm just scrolling back to see when did that actually happen. There was never 9 day phenomenon. I was scrolling back. So this is the spot index. So I was actually scrolling further and further to see when was that nine. So here there is one. Here there is one. 1, 2, 3, 4, 5, 6, 7, 8, 8 days. Yeah. So there has been a straight 8 days increase. Again, there is a straight. This is excellent. This is something really. Fifth is to it just kept on increasing. What a great day for option seller. So that has happened before. And if I scroll further down back, I don't see any particular date with 9 days continuous fall or continuous fall. So what does that indicate? In a sideways market, someone is selling Nifty in Indian indices in a big way. Why are they selling? What do they know and what do we don't know? That we need to think of. So one thing is clear that if there is a steady decline, okay, this is not a sell on fear. This is in fact a very planned selling that is being done. And this as well continues 9 days. Even after 8 days of red candle, the FIs had the guts to sell on the ninth day with volumes. Wow, that says something. If you see at the bottom, the volumes, in fact, the volumes are increasing day by day. Today is the maybe the highest volume. Let us see. So, what do we observe in this chart? This is a daily chart where the price is below all the averages and super trend, and it is bearish, no doubt. And the support of 233 is broken. RMA is also bearish. Volume is bearish. If you see a daily chart, it's a no-brainer. It's a bearish chart. Let us actually look into a weekly. If you see weekly, what you observe is it is kind of stuck in a range here between the averages. That doesn't mean it will continue to be sideways because the slope is very, very mild. It's not vertical fall, it is just 20 or 30-degree fall. So there is a chance that this will last for longer duration. So as I told you yesterday, this is not a vertical fall. On weekly also, there is a sell. Let's see how that behaves. One thing I can tell you is if this is a move after a very big trending move, then I can say okay, it's a correction. Like what happened, we scrolled from 8,000 to 18,000, it moved, and this is a correction, right? And another retest has happened, a retest or a new high has happened here, 18,700 odd levels, and again, should this be considered as a correction or is it a beginning of something big? I would actually tend to believe that this is something big because what happens is because of recency bias, everyone thinks this is a sideways market and FIs are selling big time. Why are they selling? We don't know. If this is a sideways market, it is not, I would say it is not a regular phenomenon that FIs keep selling for 9 days. So something big is happening. We don't know till the news is out. But the price is telling that get out of the market. I'm not ready to go up anyways. So on a weekly also you broke 7, 10, 2 and 10, 3. So on weekly when you break 10, 2 and 10, 3, it is clear that boss there is no positional bullishness in this market as of now. It is clear. So for example, if you see here the market has moved up, it has come down 16th of the broke 17,000 but never broke 10, 2 and 10, 3 super trends or the averages. Now, that is the sign of a bullish market. then you buy a market from 17,000 to 18,000. But not now when your 10-2 and 10-3 put the broken averages are kind of trapping the price on both sides, 18 on up and 18 and below. So what I would bet on is focus on the next big support, that is 16,821, the 89 moving average on weekly basis. That could be the near term target. It can well be the previous low as well. So price coming closer to 17,000, kind of a support. 16,821 is that. Now let us see, daily we have seen, weekly we have seen. Now let us see how on an hourly basis this market is behaving. So if you go and check an hourly chart, a 30-minute hourly chart, what you would observe here is, I'm removing the pivots. What you would observe here is one thing: after first hour, the price is always below the pivot. So there was never any recovery. Forget about it. So I'm removing this momentum indicator and volume plus and just observing the plain price movement. There is a nice steady decline, you see. There is never a break of 10 to the entire. On a swing basis, we can have this as stop loss, that is 100-point stop loss, target 16,800 or 900, 400 points target, which is quite reasonable. We also broke the previous support 17,400 on a closing basis for 2 consecutive days. When you do it for 2 consecutive days, it is not by accident. It is proper planned selling that is happening in the market. And if we go and check the weekly and 15-minute, again 15-minute is a short term. Here also the prices are below all the averages in super trends. So come what may, this market is not for bullishness or to show any gutsy brave heartedness and go buying on the dip. No, this is not a market where you have to buy on the dip. This is a market where you sell on the rise and wait for the right opportunity to book the short position. So you need to be patient because this market is not crashing down, unlike what happened on Feb first week, where the price suddenly crashed from 18,100 to almost 17,400. It's not crashing down, it is falling every day 50, 100, 50, 100. So wait for your chance. But I would say sell on rise or stay short would be a best approach. Now in this market, there are various ways people say that okay, but Bank Nifty is not bullish, it has not broken the 233 average. I agree. I agree with all of them. So when that happens, then the fall would be steeper. Till then, Bank Nifty would be trying to move sideways between 10-2 and a 233 moving average. The trend line which I've drawn here for the past 4 days, if this is respected, I agree. The sideways movement can continue in Nifty and Bank Nifty. The moment this particular trend line breaks, you are in for a jolly ride downward. So that's what I understand. This is on a weekly, this is a sideways market. On a daily, also it is on a sideways. Let us see on hourly. Hourly, yes, this is again trapped price. Again, it is sideways. So one thing is clear. On a 15-minute, also it is trapped. So what they're doing is someone is concentratedly selling non-banking stocks, stocks like I would say stocks like Reliance. If you see Reliance, see the concentrated selling in Reliance that is happening from the first minute till the last minute. People only sold every recovery. Now I'm going to show you Reliance in a different color. Let us see a weekly chart. Weekly chart tells you a story which you are not ready to listen. That is, how many in India would say Reliance as a stock can fall? Not many. At least after not being trained for 2 years, your brain has been trained for 2 years that Reliance as a stock cannot break 2000. So every time it has come to 1900, it is pulled up in 2020, 2021. Afterwards, it has been pulled up every time it came to 2300. So your mind has been trained to say that Reliance will move in always in this range of 23 to 27 for last 1.5 years. Same thing it was done here. If you see the same thing, it was done here approximately 1950 to 2300. They kept it for 1.5 year. Again now another 1.5 year they kept it, which is and but what happened here is three, both the super trends are red, and also the moving averages three are green. And the price has shot up one day, but it has given up the next 2 days. Let us see the volume. The volume actually, actually gives a much clear picture what's happening. Volume, I don't think this is the correct number. Let us wait for till tomorrow to reflect. So basically, but the numbers in the volume yesterday are high. So the entire green bar, both from price and volume, are kind of engulfed. So there is no bullishness. This is on weekly. We shouldn't look into weekly before the end of the week. So let us look into daily. Daily also, what happened is today's volume is greater than yesterday's volume, and also market is also Reliance has also fallen. So how many times did this support got tested? One, two, three, four, five, six, seven. This is the eighth time. If I say there is a ceiling, there is a floor where you have seven times, and still six times I have tested that ceiling. Seventh time I have come. I've tested it for 4, 5, 6, 7, 8 days. Means either it is so strong that it cannot be broken, or it is getting completely diluted that it is getting broken. So now it thought first the market thought, okay, this will not be broken. It has gone up, but there has been a very good concentrated selling from FIAs. Let's come down here. So now with the body is so big and tick is not there, Reliance is not going to stop out here at 2300 because seven times it did already. In fact, I would say more than seven. I would say 100 times it has done on a daily basis. But on a swing basis, let us say this is entire bunch is considered one before it goes up two, three, 4, 5, 6, 7, 8, 9, 10, 11. Even there has come 12. So almost, and here another seven times, almost 20 times to 25 times it has come to 2300 and tried out. That is a lot. A stock coming to 2300 25 times and moving up, that is a lot. Now what is happening is with volume it is slowly falling and body is quite huge. Still now you are having wicks below, now you are having body formation, which means there is open short positions overnight. An open short position overnight would never think that okay, I'll close with the 5 points profit tomorrow if there is a gap. He would be a, I would say, a lion who is targeting the profit bigger than 5 rupees, 10 rupees. How much can he target? Well, if you put gun on my head, I would say here you have tried out. You have taken support here on 233 average at 1000. You shot up. You've taken support at 18 average. Again, you shot up, and you are now taken here at 53. You shot up. You have now taken here at 89 and you shot up, and now you are breaking 89. So next target is 233, that is 1950 or 2050 levels. That's 15% down from here for Reliance. Can you believe? Does that happen immediately? Definitely not. Is this an Adani enterprise or what? It can't happen immediately, but it will happen in a grinding way where every single bull is butchered. Every single mind which is trained that, oh, this cannot fall below 2300 will be butchered, and slowly grinding fall will happen. Grinding fall kills the traders because there is no VIX where you can't play option buying strategy. You have to stay overnight bearish. In market like India, where mutual funds are here market, where everyone was along, this is a clear cut shot that you have to play with overnight position. That's risky. That's what our brain is trained, but that's what the market is indicating you are supposed to do here. Overnight shots. So I would say traders be calculative. Market is actually going to dogs. I don't know why I say that, but it's clear from the charts that both Nifty, Bank Nifty are in a falling sloping trend line, and OI is not supporting that. Support is also supporting the fall along with price. So when a price along with OI is moving in one direction, gosh, there is a long way to go. With that, let me wrap up here. Thanks for patiently waiting, listening to me. Thank you. Have a nice day.